Hey guys, and welcome back to the show where we talk about all things stock related. So we look at what's happening in the market, we talk about different trading strategies to help you get to that $1 million, and we also look at different things just to build and grow your portfolio. So in today's session, we're actually going to talk about investing during and for the Christmas period. So, whether you're new to investing, you've been investing for a period of time, this is an episode you would not want to miss. So, when it comes down to investing during the Christmas period, the first thing that you want to do is you want to actually budget out your funds. So, a lot of companies they actually pay bonuses during the Christmas period. So, or incentives depending on what they call it, but it's usually the same thing. So, when you would be working for the full 12 years, and then at the end of the 12 months, they would actually do an appraisal, and based on your performance and your contribution to the company, they would then decide how much of an bonus that you should actually get. So when it comes down to now getting that extra income in your pocket for that one-off payment for that Christmas period, a lot of persons tend to usually spend it, and they spend it on luxurious items or items that they would want to get for their loved ones. So what I'm gonna share with you is that the best thing that you can do is actually budget out that funds. So during this whole Christmas period, so that December period, you tend to spend a little bit more than you normally would throughout the year. And so what I would encourage you to do is actually make a budget and take that into consideration. So, when you're going out to do your shopping at the mall or the plazas or online, you want to actually have like a 20% buffer. So, whatever you plan to spend, set it at 20% higher, because usually you would be going above what you actually had set out. And this is because you have set out that you want to get particular items, particular things, and the discounts, the deals, you end up purchasing more than you had initially planned or intended for. So by setting that 20% buffer now, you know that once you reach that 20% more than you actually had planned, that's where you cut off and you don't spend anything else. Now, another strategy that you can consider as well too is you can look into transferring the amount that you would like to invest before you actually do anything. So if you're working and let's say you normally get $3,000 a month and you get an additional $2,000, what you can do is, after you calculate your regular monthly budget, let's say that you have an additional 2,500 left over, then what you can consider is actually, as soon as that bonus comes through, you can just transfer that to your investment account, and then you can have the amount of funds that is left back to actually do your Christmas shopping for your loved ones. And so with that, this would already have the amount of money that you want to invest in the account, so you wouldn't have to worry about overspending or going above and beyond. And the third tip that I would like to give regarding budgeting, and this is more for persons who are not disciplined, and that would be to have a second account. So some persons have multiple savings account or a checking account, and so what you could consider is that if you are not a disciplined person, you can have another account that is not tied to an actual debit card. And so what you can do is that when you get the pay, you can automatically transfer over some funds into that account. And so you would only be spending what is on the account. So rather than transferring it directly to the investment account, let's say that you might incur some additional expenses that you would not have accounted for. Let's say your motor vehicle gets damaged or get a flat tire, or you need to service it because something happens, or the house that you live in needs some sort of repair, and these are things that you would not have budgeted for, and so you would have that funds in that additional account. So if this were to happen, you could just pull from the funds and you could transfer it from that account back onto the account with your card, and then you could actually make the purchase and payments for it. And similarly, if you use a credit card, please do not spend more than you earn on the credit card. So if you only earn $3,000, don't spend more than $2,000 on the credit card, because you know you need to invest and you would like to save and stuff. So don't go around spending $4,000 on the credit card, because you need to consider how you are going to repay that. Unless you have an additional income stream coming in where you can cover these expenses, do not spend more than what you earn. Alright, so the next thing I want to look at is investing. So it comes down to investing now. You can actually set up your investments so that when the Christmas period comes and the Christmas time comes, you can actually be selling out your investments or pulling from it to actually cover these expenses. So by having a set amount going into your investment account each month consistently, it can change your life within 12 months, 24 months, 36 months. And I say this to say a lot of stocks actually trade on the markets. There are over 1,000, over 100,000 stocks that trade. And what you need to do is you need to find the best stocks that fit your needs and meet your criteria. So once you have your strategy and your what you want to invest in and how you're going to invest, then you would then go into the industry and the sectors that you would want to invest in, and then you invest based on that. Now, a lot of times there are IPOs that happen on the market, and this year has been pretty slow in terms of IPOs because of what was happening in terms of the volatility and the investor confidence. But a lot of times IPOs are a great way to make money. They're also a great way to lose money because the risk is higher. And so when you're investing in IPO, you want to be smart, you want to be sensible, you want to actually look into the company, you want to look at what other investors and analysts are saying about the company, and then you do your own necessary research. And so when it comes down to investing for the Christmas period, you may want to consider actually seeking those super annual above normal returns. And so you know that the greater the risk, the greater the reward, and also the greater the risk, the greater your loss of funds. And so if you're going after super normal profits, then you know that the risk of you losing will also increase as well too. So if you are investing and let's say that you have 4 stocks in your portfolio, if one stock goes up 100% within that 12-month period, then you'll be fine. And how will you get or know which stock is going to go up 100%? You don't know. And honestly, you might have an entire portfolio and nothing goes up 100%. Maybe nothing even goes up more than 20%. Maybe you're losing on the portfolio. But the thing that you want to do is that in the initial stages you want to be consistent, you want to be building. So if your goal is to get 100% or more on your investments, then you would be going into industries that are developing, that are growing, that has a lot of drive behind it, a lot of momentum. And so you know that you'll be paying more attention into the market. And so once you hit your price target, whether it's 100, 150, 200, 500, 1,000, whatever percentage you are going after, once you hit that target, then you're actually going to be selling off, and then you can actually reallocate the funds. So you can put it in another stock, you can actually move it to a savings account, you can put it in a mutual fund account, a money market fund account, some sort of account, money market instrument account, just something to actually preserve the wealth that you would have created, so that when the Christmas time comes and the additional deals come up, you want to ensure that you have that funds to actually pull from. And when your additional bonus or incentive comes through, you can invest that money into the market, and so you can continue building and developing on your wealth while not really are not necessarily touching your capital too much. And so the whole aim of this game is that you want to be consistent, you want to have that steady cash flow coming in, and at the end of the day you really are working a paycheck for cash flow. That really is what your income is. So it is just the cash flow that you are getting so that you can survive, you can continue paying your bills and enjoying your life and living your life. And that really is it, the cash flow of your life. So how do you want to make your cash flow? Do you want to be working a 9 to 5? Do you want to be an entrepreneur? Do you want to start your own business? Do you want to sell products? It really is up to you how you decide how you make your additional income or your actual income that you live off. And so when it comes on to this whole cash flow and investing, now you want to ensure that you are constantly putting in the account, and my suggestion would be as consistent as possible. So if it's every month that you get paid, put in the investment account every single month. And though you may want to have the same amount being invested every single month, and my recommendation is $1,000, because that is really what gives you the drive to see what you want. And if your funds are compounding, especially if the growth rate is pretty quickly in the initial stages, you want to know that you have a decent sized amount that can go into the investment. So if it's growing at a fast pace, you have a consistent amount that's going in that will be building and developing and growing as well. And also, if it is growing slowly, you also want to ensure that you are being safe and steady, so that if something should occur in the market that changes overnight and the growth rates spikes, you would have been so consistent from before that now when it spikes, you'd have built up that habit, you'd have built up that fundamental, that foundation, so that you can benefit from this rapid growth rate. So when you are inputting additional funds in, it doesn't really affect you too much. And what I would like to share with you as well too is that have your floor amount, that is, have an amount that you will not fall below any single month. So if that amount is $500, then you know if things are tight, if you are struggling a bit any particular month, you're going to ensure that you do not invest less than $500. And that's just an example. Set the amount that you think is manageable and worthy for you to actually invest even if you're struggling, so that you can remain consistent, you can keep abreast and keep going after your goals. And so that really is it when it comes on to investing for that Christmas period, because at the end of the day you really want to ensure that when December comes the next time around, you have been investing so consistently that you can start withdrawing funds. And the aim is that you're withdrawing just off the profits, and the capital will still be there untouched, so that whatever you're withdrawing will be paying for the needs that you're withdrawing for, whether it's to purchase gifts and for family and friends, or pay for additional expenses or unplanned expenses. You want to ensure that you have this cushion that would be from the investments that you would have done. And that really is it for today's session. So thank you so much for tuning in. If you like this episode, I ask you to give us a thumbs up or a heart wherever you consume this material. Share this video with a friend so who you think would benefit from this information as well, and have that discussion with them so that you can actually educate yourself and learn and grow as well too, and listen to it over and over again so that you can get that knowledge and you can understand. And if you have any questions, do feel free to leave a comment below, and I love when you actually send me comments and I do get in touch with you. And subscribe or follow wherever you consume this material so that you do not miss out on any new episodes as soon as they are released. Until next time, take care. Love you guys. Bye.